Good morning and welcome this morning to Trader Talks in today's market. There's the opening bell. That means the market is up and running. I'm with you here this morning. Thanks to all of you for being here. Thanks for joining me. I've got Brent Moores out there in the chat helping out. I'm here in place of Kevin Horner today, who is taking a little vacation. So that is a good opportunity for me to jump in and say hello to all of you, whether you're here in the live version or in the recorded version. Thank you for being here. We're grateful that you are a part of these Trader Talks webcasts and a part of our trader education. If you are brand new to this webcast, thank you for coming this morning. If this is your 100th time being here, we are just as glad to have you here as well. So be a part of the conversation. Brent's there to help answer those questions in the chat. If you're in the recorded version, leave us a comment. And it's kind of an interesting morning this morning. The futures were up a little bit. We're going to get into that. We're going to get into kind of the back and forth that's been going on in the last couple of days as we now go into day, I think, 16 of the government shutdown and what that means. We've got a bunch of earnings announcements starting to get through, the bank earnings. So we'll talk about those things here as we get up and started this morning. A couple of quick, however, housekeeping items that we want to take care of. Remember that everything we talk about simply for illustrative and educational purposes only. It is not a recommendation of any particular security or strategy. We're not giving you advice. We're not telling you what to do. The symbols that we're looking at are those that are emergent in the news, not that those are recommendations in any way, shape, or form. Now, if we talk about options, which we likely will not, although from a kind of an adjacent standpoint, options carry a high level of risk. They're not suitable for all investors. Make sure that you're aware of the characteristics and risks of standardized options before considering any option strategy. Also, remember, we're going to be using the Thinkorswim desktop software platform, specifically the paper money version, which is a great learning environment. It's great for educational purposes. It is not a guarantee of future success out there in the real world. And remember that the paper money version doesn't do certain things that the live version will do, including things like studies in scans and early assignment, short options, those types of things. Now, we're going to use a lot of technical analysis today. It's not the only way of looking at the market. All those ways of looking at the market, whether it's technicals, probabilities, fundamentals, all of those are theoretical in nature. None of those are guarantees. Past performance, no guarantee of future results. Now, one thing we will likely take a look at today are some of the futures contracts out there that define areas of the market, crude oil, gold, those types of things. When we talk about those are for market evaluation only and not as any kind of an indication or discussion as a tradable instrument. We do have classes for that, but if you're going to trade futures, remember those are highly leveraged products. They carry with them substantial risk. They are not suitable for all investors, and they do require separate trading authorization. So be aware of that, including virtual currencies, as we talk about those today. Those have even some additional risks and considerations associated with them. So let's jump out here into the Thinkorswim desktop software platform as we get started. And again, my thanks to Brent Moores in helping to discuss and answer some of those chat questions. One real quick chat question that I wanted to pop into. I am still doing the trading index options. I've been on the road for a couple of weeks, and Connie Hill has been doing a phenomenal job in filling in for a couple of times on that trading index options webcast for me. It has now moved to 3 o'clock Eastern time. So it is in the afternoons on Wednesday. Before we're done today, remind me, I will show you the entire schedule and calendar of webcasts so that you can see those and you can see any changes that have come up here in October as we move into this fourth quarter of the year. And as we're now into earnings season, that is one of the reasons why we're starting to see the market move. So here's the S&P 500. A little bit of a pushback. We see that drop down to the 50-period simple moving average. I was on stage in Orlando on Friday along with Rachel Deschelle and Brett Crowther and Ray Kimbrell and Scott Durfee, and we were talking about technical analysis, and we weren't really even watching the market. We were looking at examples, but we were seeing that that pullback back down to that 50-period simple moving average. We get a rally up into an inside day. We get another rally up, and that gives us a little bit of a range extension back down to the 50-period moving average and pushing a little bit higher here. The question is, Does this move on the SPX have enough oomph to get through kind of what has become this resistance area following this little bit of a sideways move? Let me zoom in so that we can see that a little more closely. And we kind of have this stopping point here, which was previous resistance. Nevertheless, it broke through the midpoint of that big red candle, which for some technicians becomes kind of the big area of resistance. And that's where we saw Monday's return and bounce kind of push back up to and then stop the midpoint of that red candle. Now we're kind of knocking on the door of this horizontal resistance that if we check left is giving us kind of a reinforcement of the 6705 level roughly as a resistance. We've backed off from it a little bit this morning, but the RSI is starting to trickle higher. It's not back up to the same place that it was. If we look at where the RSI was the last time it was banging its head on the 6,700 mark, that RSI was considerably higher, but not significantly so. Considerably, but not significantly, other than the fact that when it was knocking on the door here, right in the middle to end of September, that RSI was up in that extreme range. I would argue, perhaps, from the standpoint of kind of that momentum perspective, that the RSI sitting at 55 with a resistance level overhead is maybe a more bullish position than the RSI sitting at 75 with resistance overhead. So that would maybe suggest that there is, especially if it's been on the rise, that there is some room in that momentum perspective in that RSI for this to continue to move to the upside in the SPX. So a couple of people are asking about this particular grid right here, or this particular study that I've got on here, year-to-date, month-to-date, week-to-date change, percentage change. That's a custom scripted study. By the way, we teach a webcast on Thursday afternoons on Think Scripting. Brent's taught it. Mike Fairborn teaches it. I've taught that. James Boyd has taught that webcast. So what I'm going to do is I'm going to open up that script for you. I'm going to click on share. I will put this in the description of this webcast as well, but I'm going to pop it down here into the chat for you. And remember that anytime we share any of these scripts, those are, one, for illustrative and educational purposes, and two, those are not guaranteed for time or accuracy. Brent beat me to it. Man, he is fast. All right, let's take a look at what's going on in the NASDAQ. And the NASDAQ may be seeing a little bit more upward momentum, but doing something almost exactly the same. We got this pullback into a bull flag, and it's trying to get a little bit higher here. RSI perspective looks just about the same, and starting to see that move to the upside here. A little bit of a thin movement, but the market is just barely open. So we'll see if this has enough oomph. The real kind of Rubicon for this to cross, I think for the NASDAQ to cross, is right here around this 25,160 level or so. The previous resistance, those previous highs. And if you can get out of that range and start to kind of clear some of this kind of political rhetoric-inspired downdraft, if you will, then if it can get through that area, I think maybe, perhaps, from a technical perspective, that trend stays intact and resumes kind of pushing forward. You know, an uptrend and a long-term uptrend, and one that we've got described by the 200-period moving average and the 50-period moving average here. Both of those are still intact. It never made a new lower low. It really just kind of came down to that same area and is continuing to move. But not making new higher highs isn't the same as making an uptrend, right? Not higher highs and not lower lows is simply a sideways trend. So in order for this to resume kind of that push, it's got to break out of this resistance level, and it's not quite there yet. Will it get there today? I don't know. We'll see. So let's take a look now at the area where that, however, is happening, and that is in the Russell 2000. And this is really, really interesting because, you know, maybe this gives us some different perspective on kind of, again, that political rhetoric impact that we saw last week. Because it was the Russell 2000, the small caps that came, you know, just blowing back off that bottom never really got as close to the 50-period simple moving average in this particular case, simply got down to a horizontal support and then came roaring back in those resultant 2 days. Again, also on some political rhetoric, but on the fact that we get some financials. Now, here's an interesting consideration. Now we are in the middle to tail end of the financial sector earnings releases. We've got some of those financial sector companies that have released earnings, upcoming earnings, and today we've got some additional ones. You've got KeyBank, you've got BK Bank of New York Mellon, you've got American Express coming tomorrow, you've got Ally, you've got some of the regional banks that will be announcing earnings. And so one of the things that has happened over the course of the last little while, last 2 or 3 years, remember that the Russell 2000 index rebalances every June. And it rebalances based on kind of market influence. So in the last couple of years, it's added more influence and more representation from technology companies in the technology sector. In the last 2 or 3 years, it's added more representation from the financial sector. And so the Russell 2000 now becomes perhaps even more so than the S&P 500, a reflection of financial sector strength, because it contains not only the regional banks, but it also contains some impact from some of those other banks that fall within this particular space. So the Russell can become reflective of those bank earnings. And I think that's part of what we're seeing in this push to the upside, as Brent points out that this moved to an all-time high yesterday. Speaking of an all-time high, you guys help us to make these webcasts reach all-time highs when it comes to viewership and all of those other things that are important to measure. One of the things that we measure is how you feel about these webcasts. And in the chat right now is a feedback survey. We would love to hear your thoughts and get your assessment of how you feel about these webcasts and help us to make them better. So do me a favor, fill out that feedback survey. Let us know what you think. You are a part of this process because we read what you talk about, what you say in those feedback comments, and we use those to make these webcasts better for you. So starting to see this push to the upside. One of the things to think about is that the Russell had been in a very, very tight channel, and it got blown out of the bottom of that channel, and it kind of retests, and it falls back out of that channel, and it comes back up into the channel again. So we're back into the channel, and that, I think, to a lot of technicians is an indication of the strength of the channel. It really kind of reinforces the strength of that channel. So even though we're getting this deliberation pattern, and a deliberation pattern is really one, and let me just kind of line this out with my annotation tool here so that you can see it. This is really kind of an interesting deliberation pattern. So we get a momentum candle, that momentum candle to the downside, and we get a shift in that momentum as it pushes higher. And then we get a long momentum candle, a smaller spinning top candle, and then a small doji candle. So it kind of looks like this: momentum, momentum, smaller candle, not much of a candle. And you can kind of think about this as what institutional investors might be doing. Push, 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 right? Buy, 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 and then let that price kind of settle. So we might not see today, even though we've seen these earnings announcements coming from the financial sector and from the airlines and from some of the small caps, and we're going to get into more of the small caps. We may see the Russell 2000 kind of pause here a little bit in this kind of 1, 2, 3, 4, buy deliberation type of pattern, and then let that price kind of settle back. What some technicians then might be looking at in terms of this type of pattern would be a pullback into, say, for instance, a support level. So that support level that seems to kind of exist here is right about there, kind of at the top edge of the momentum portion of the push. So we could get a pullback and then a bounce off of that. If it breaks that level and comes back down through, then that might be more of a concern. But it's got some room to move in terms of the RSI. It's got some momentum behind it here in the Russell 2000. And there may be some bullish sentiment here kind of surrounding the Russell 2000 as well, especially as we get into some of the data points going into the end of the month, which is the next the next FOMC meeting, which could create more interest rate cuts, which would be theoretically, at least as far as intermarket analysis is concerned, theoretically beneficial to the small caps. So that could be one of those things that creates some upward momentum in terms of the Russell 2000 here in this case. A couple of the economic data points we've got coming out today. We've got the Philly Fed Index. We've got business inventories, got the housing market index. That Philly Fed Index is going to be an early read on the FOMC meeting, but you also have Fed speakers. This is one of those Fed speaker days. So pay attention to what happens, I think maybe specifically to the Russell 2000 today, because you've got Waller, Barr, Merian, Bowman, and Barkin all speaking today. This tends to be that time, and because we're kind of outside of the quiet period ahead of the FOMC meeting, this is the time where the FOMC, the Fed governors, those Fed speakers, start to float trial balloons. Not that they're driven by the impact on the market, but they want to kind of get a sense of whether they do this overtly or whether this is a kind of a subconscious thing. I would argue maybe, I don't know, this is my thought, that they do this a little more overtly to just test. That's why they have these speeches lined up ahead of FOMC meetings to kind of see how the market is going to react. More importantly, to see how the banks, because that's who they're beholden to primarily, is the banks. That's what the Fed does. But to see how the movement of rates and how the talk of movement of rates might change the perspective on the market. So watch as these speakers speak today and see if the Russell 2000. So let me give you a schedule of those. So Waller, Barr, Merian speaking at 9 a.m. Eastern time, so have already started speaking. Bowman speaks at 10 a.m. Eastern time, which is coming up. Barkin speaks at 12:45 p.m. Eastern time, and then Merian speaks again at 4:15 Eastern. So watch as those speakers start to put stuff out there and see how this market changes throughout the day. You can even put it on a shorter term time frame. You can put it on an intraday chart and get a sense of how their discussion, while not necessarily overall market moving, may cause movement and fluctuation in that shorter term time frame. So if you were to put this on, say for instance, a 5-day 15-minute chart or a 5-day 5-minute chart or whatever you want to look at. Here's the Russell 2000 on a 5-day 15-minute chart. Each one of these candles is 15 minutes. Let's even go a little more granular, 5-day 5 minutes. We can start to see how things are playing themselves out, a little bit of a pullback from that area. Watch this level of support on an ongoing basis. And again, this is kind of cool. Now, you don't have to get this level of granularity in terms of what's going on throughout the day, because I know not everybody has the curse/benefit, if you will, of being able to watch the market on an ongoing basis and watch it tick by tick. Brent and I kind of are in that position of doing that because that's what we do, and maybe some of you are as well. But it is a curse/benefit, I think, to have that opportunity, because you get sometimes caught up in all of that narrative that's going on. Speaking of the narrative, one of the narratives that has been changing is volatility. So I'm going to pop over here to our VIX grid really quickly and see what's going on with the VIX as we get into this market movement this morning. I'm going to zoom in over here on the right-hand side, well above its average. We see the big spike in volatility on Friday that caused, or that was not causal, it was correlational to what the market did. And the VIX was kind of happily cruising along and kind of grinding along. You know what? That's a good question. 25-20-01 to Jan. There is, I'm sure. C-SPAN possibly. I don't know. There might be other networks. You could probably go to the Fed's website and see if there are links to those speeches and maybe even audio links to those speeches. I don't know. Maybe there's a whole TikTok channel on Fed speakers. Maybe. Probably is. Anyway, so what we're seeing here with VIX is kind of this up and down kind of piano key type VIX, up and down, not a lot of movement. But what's interesting, for sure, and Deep at the bar says maybe the Schwab Network. So Schwab Network, brought to us by our media affiliate, Charles Schwab Media Productions, which, by the way, you can access right here on the Thinkorswim platform. You can just pop this in and switch your gadget over here to Trader TV. By the way, I'm a frequent contributor on Schwab Network. I host a show on Schwab Network. Kevin is a frequent contributor to the Schwab Network. Brent's a frequent contributor to the Schwab Network and to my show, Your First Trade. So you can check it out right here. I'm not going to go live just because I don't want to suck the bandwidth down for this presentation, but it's right there. We're not going to broadcast on the Schwab Network those Fed speeches, but you're going to see the discussion of those impacts on the market come up in the various shows throughout the day on the Schwab Network. Thanks for letting me put in that shameless plug for the Schwab Network. What I thought was interesting here is on this VIX chart is the fact that we're seeing something a little bit different, right? So June, we saw that spike in volatility, and then it took a few days to bleed off. That's kind of an unusual scenario. Usually when we see a VIX spike, the bleed off is very quick. Usually it is a spike and then it's a crush. But a couple of times, and maybe a little bit more so now, we're starting to see this push and then it kind of goes sideways a little bit. And that's what we're kind of seeing here. Again, I think this is a function, as Brent pointed out, that things might be a little bit more interesting because we're in the middle of a government shutdown, that there's kind of an underlying base level of volatility here in the market and uncertainty in the market. And so that may be what's keeping volatility unstable at the moment, that VIX level kind of elevated relatively. It's not spiking still, but neither is it kind of bleeding off and going back to kind of that complacency area. And if we pop over here to this particular grid, this is the VIX relative to its own volatility measure. So how volatile is the VIX relative to itself? This is the VIX of the VIX, or in other words, the VVIX. So that white line, you can see that the volatility of the VIX, even though the VIX is flattened out, that volatility of the VIX in the last couple of days still started to spike. So still seeing some elevated volatility in the VIX. That means there's some more variation in that volatility measure of the VIX. And that suggests, again, that's an indication of some pretty good kind of uncertainty in the market. We see a couple of scenarios where the VVIX spikes above the VIX and then comes back down. So again, remember, volatility is a mean reverting instrument. That high VIX is met by option selling, and that pushes those prices down in those options that make up the VIX, the SPX options. But when there's high implied volatility in those options and there's high volatility for the VIX index, that tends to be an indication of a return back to the mean. This relationship doesn't get overextended very far before it starts to see a push back into that range. So it's very likely we're going to see, again, not predictive, I don't know, but given what technical analysis suggests and this intermarket relationship would suggest, volatility likely to see a little bit of a collapse, especially as we get post some of these early earnings announcements here. All right. So let's pop over here to our single grid really quickly. And from there, we will take a look at some individual segments. Actually, before we get to the single grid, I want to do a couple of things. I want to come back over here to my sector index grid and just kind of see what's going on with these sectors. We'll kind of do a quick rotation around the market and see what some of the sectors are that are seeing strength or maybe seeing weakness. This is a grid showing all of 11 sectors plus the SPX at the same time. Just from this level, I can discern a couple of things. One, consumer discretionary is pulling back a little bit here. I'm sorry, consumer staples had been pulling back, now starting to rally a little bit. This is consumer staples over here. Consumer discretionary is right here. Healthcare saw a little bit of a bull flag. Real estate kind of coming back and staying right in the middle there, kind of going flat. Utilities have been the stronger performer, which is not unusual necessarily given what's going on. Energy still falling off a little bit, rolling over a little bit. Information technology still and communication still in strong trends. Industrials may be challenging that trend that has been in place for a while. So let's look at these individually really quick and kind of score through these. So there's energy, kind of rolling below that 50 period simple moving average and kind of staying a little bit low. And with what crude oil has been doing, that's not at all surprising. As goes crude, so does a large portion of the energy sector. Same thing with materials because it's driven by crude oil. But materials, to a large degree, kind of tracking below. A lot of this has to do with construction and home building efforts as well. If there's uncertainty in the market, the forward look at home building and the forward look at commercial construction tends to slow down. That tends to weigh on materials. Industrials, likewise. But it's interesting because we were seeing a pretty solid push and industrials kind of coming back down, still holding that support at the 50 period moving average in this particular case. Consumer discretionary coming back up and recovering a little bit. We're going to get into some of the consumer discretionary stocks later in this earnings cycle, but some of those that are bellwethers for consumer discretionary, like American Express, like MasterCard, like Visa, are going to be coming either at the end of this week or next week. You're going to start to see those. And then I think one other area to pay attention to in consumer discretionary is within that halo, and that are the pay later apps, the PayPals and the Venmos and those others that may give a read on utilization and may tell us how resilient that consumer discretionary space is. Consumer staples starting to see a rally, and this is a bit concerning when we talk about volatility. Because one of the things that I talk about and have talked about quite a bit is the fact that when consumer staples are below kind of a major support level, we've seen this major support level in this particular case right there on that 876 mark, that would suggest that the market has more of a risk-on perspective and less of a defensive perspective. They're not turning to the consumer staples to be defensive in their purchasing. Now, what we're seeing since Friday is a big shift in consumer staples from below that support level, what is now acting as potential resistance, in fact, blowing up through that resistance level, through the 50 period moving average and starting to climb. That would suggest that the market, perhaps into the end of the month, perhaps into that Fed meeting, is becoming a little less risk on. I'm not going to say risk off yet, but I'm saying maybe a little bit less risk on, and there's a little bit of a rotation back into some of the defensive nature stocks. We'll see. Healthcare, kind of doing the same thing. Healthcare generally has been somewhat of a defensive, but we're seeing a little bit of a bull flag type of bounce there on healthcare. Financials rolling down a little bit. And again, they had some strong upward momentum, but starting to see that pull back a little bit. We're going to see more of those financials, but financials also kind of in a wait and see mode as they have been about interest rate cuts, because those are going to be a double-edged sword when it comes to the financials. Information technology mirroring the NASDAQ somewhat without all of the momentum push. And again, kind of running back up into this resistance. So is this the possibility of creating a bit of a head and shoulders type top here in information technology? That might be the concern in this space. Communication services, on the other hand, as we roll into some of the earnings, we're going to get earnings from companies like Netflix and others. The streamers are a big part of this. The telcos are a part of comm services. So as they start to see strength, we're going to see T-Mobile getting an upgrade. We're seeing some others, Verizon and others, that are starting to see some of those upgrades. And so that's going to be an interesting perspective on the shift between information technology, which is separated into software and semis, and comm services, which is streamers and entertainment and those types of things. This is kind of rotating back and forth a little bit. So a little bit of a change that we've seen here. And then boom, utilities. Shockingly, that was a joke, folks. That's a joke, I say, a joke. Utilities still a flood to the upside here, and starting to see that move kind of extend itself. We're getting gap up rally, gap up rally, gap up rally here off of a bull flag. And so really some strong movement into the utilities, not necessarily from a defensive space, because that's where utilities generally have been, but two things. One, in anticipation of more interest rate cuts, and two, the absolute abject demand for power infrastructure, power from the utility space, power from electrical utilities, power from hydroelectric utilities. It's driving this utility sector. Water and gas, absolutely, also driving this to the upside here. Real estate kind of trending sideways again, a little bit of a pullback. And boy, this is one of those areas where a lot of people don't understand the mechanics. You know, just because the Fed is cutting rates on the front end doesn't mean that the 10-year is dropping. So pay attention to the 10-year as well. Home builders also, we're going to get some earnings announcements coming up as well. And then there's that S&P 500, kind of the wrap up to all of those. So let's pop over here. I want to pop back to my single grid really quickly, and we'll look at some individual names and some individual spaces. So I want to do this real quick. /CL. This is kind of a lightning round of market influences. This is crude oil. And crude oil pushing prices again to the downside. We've seen OPEC and OPEC Plus movement. We've seen an India, Russia jawboning about who's going to buy crude from whom. That's nevertheless pushing crude below kind of this baseline that it's been at around that 60 mark and approaching down in this $58 a barrel range, which is below by about $5 to $7 lifting costs for a lot of domestic crude production. So one of the things to pay attention to, and we're going to get this on Friday, one of the things to pay attention to when crude is down below 60, watch Baker Hughes rig count numbers. We'll talk about it on Friday in the Market Movers. I'm sorry, it is now the Market and Sector Analysis webcast on Friday afternoon, where we wrap things up. But pay attention to Baker Hughes rig count numbers, because they may start coming down again when we see crude oil pushing below 58. No reason to build more rigs and sink more holes when the cost to get the crude out of the ground is more than you can sell it for on the market. Now, RBOB gasoline might be a little bit different from that. That's RBOB taking a big move to the downside, despite the fact that refiners are in that phase where they're rotating and have already started to be rotating into winter blends, winter refinery blends. And so that has an impact, and we're starting to see that push to the downside. This is maybe a demand indicator and perhaps a concern for the Fed going into this Fed meeting as well. Again, speaking of demand, we've got a feedback survey out there in the chat. Help us out. Fill out that feedback survey out there in the chat and let us know what you like seeing. A couple of other things, /GC. Gold is one on a lot of people's minds, moving to fresh highs here, 42.74, and on to the upside, seeing a little bit of a drive to the upside. If you're a fan of, they do report both, Bill. So, we've got a report of both of those and active rigs. They're going to pull some of those rigs out. And so we're going to also see, and one of the things that we keep in track of and talk about in that market and sector analysis is new built rigs, the number of new exploratory rigs that are being bought. But gold, if you're a fan of Gold Rush on the Discovery Channel, you got to think that those guys out there in the gold fields are salivating at these gold prices, and kind of that opposite effect. When gold prices are like this, they're going to do more things. They're going to buy they're going to buy equipment and things to start pulling more gold out of the ground to satisfy that demand. So we're going to take a look at things like Caterpillar moving up, Take a look at Goodyear Tire that makes the tires. Starting to see a little bit of a bounce there in Goodyear Tire. CMI, which makes the diesel engines for those products, it's been largely moving up as well. And then some of the NEM, the gold mining stocks, continuing to move to the upside. Yeah, heavy equipment for sure. So gold and its halo effect really kind of dragging things upwards. I want to take a look at here really quick. /BTC. This is Bitcoin. And Bitcoin, again, not digital gold, not a substitute for. It has its own valuation relative to what it is. And it's been pulling back perhaps into a level of support here right around this 10,000 or 199,991. And maybe finding a bit of support /ETH, /ET, not ETN, /ETH, Ethereum. Starting to see maybe a little bit of bounce, but they're moving fairly close to one another. So let's take a look at some of the individual names that have been moving and have had upgrades and downgrades. The couple that I wanted to look at here, UAL following an earnings announcement. And United Airlines kind of pulling back a little bit. With one difference from Delta Airlines, they've increased capacity here. Delta Airlines, on the other hand, decreasing capacity, indicating that they're leaning into that premium seating segment of their base, their customer base. So I'm looking for this to maybe break above that resistance level and kind of continue out of this kind of an inverse cup, and not inverse, not upside down, but a leading handle cup type of pattern. So a handle and cup pattern instead of a cup and handle pattern. Same kind of thing. We get this push to the downside. So I might put in here in this particular case, looking for that pop to the upside, not knowing if it's going to happen and not predicting whether it's going to happen, but I'm going to come to that resistance and I'm going to say, fine, if this moves above 62, I'm going to right click and I'm going to create a buy order, and I'm going to put a stop in here as well. I'm going to put that stop kind of down below this support, right about here, below that little pullback, just about that 60 level. So which is for easy math, I'm going to do this with a buy custom with stop order, and I'm going to make this a buy stop, not a buy limit order. If I did it as a buy limit order, it's going to fill right now. So I'm going to say, fine, if this goes to 62 and breaks above, which is another, what did we say, 62? Yeah, it's another couple of bucks higher. That's fine. And we're going to make that good till canceled. And I'm going to make my stop just off of this bottom. I'm going to go at a kind of a different price here. I'm actually going to go 59.97. The reason I'm going to a different number is I want to be a little bit different. I don't want that to be at a big round number to stop me out of the trade. And that's going to be good till canceled as well. Now, this is going to be kind of a waiting order. This will wait until this buy stop characteristic is met. And then it's going to trigger at the next fill at the next available price, which could be substantially higher if it gaps up on some news. So be aware, stops don't guarantee execution price, just activation price. And in the event of a stop limit order, that order could get gapped around and not fill at all. So I'm going to put this in our market movers group just so that we can see it. I'm going to go ahead and click on send. There's my structure for the trade in terms of getting into the trade and getting out of the trade if it goes in that upward direction, just kind of waiting on that possibility of that upward move. Now, a couple of others that I wanted to take a look at here this morning that are getting upgrades and downgrades. TKO, we said, this is TKO in the, if I remember right, well, we can pop over here and we can find out if we go to the fundamentals section in TKO. Sports entertainment, that's what I thought is, again, that comm services space, and seeing that strength here. Come back over here to the chart and seeing a little bit of a bounce. Also in kind of an ancillary to that space, LVS, Las Vegas Sands, starting to see going into an earnings announcement, they get an upgrade today. Las Vegas Sands gets that upgrade today, and maybe a little bit of a gap up and sell off. So bear flag traders might be looking for a possible bear flag out of that. moving back down. PPG in the materials space and in the industrial space, maybe starting to see that little bit of a turnaround, but still somewhat of a downward trend in this case. TMUS in that communication space. Again, I'm kind of looking at this as being one of those kind of weird, it is a weird ascending triangle because we've got an earnings announcement that might be a catalyst, but it's been pulling in a downward direction. So once again, that might be a scenario to perhaps put on that type of buy stop trade that we were looking at in Delta Airlines. But let's take a look. I'm going to put on here my RSI just so that we can see that. And I want to kind of get a sense of what that RSI is doing. So here's what we've got. Look, we've got equal highs. I'm just going to look at this from a bullish divergence standpoint. I've got equal highs in price. In fact, slightly lower high in price, but I've got higher highs in the RSI. So this might be another one that I would come into, even though I've got kind of a sideways overall trend, intermediate term downtrend. I might come in and right click and do a buy custom with stop. And again, I'm going to protect that stop or this order with a stop, but I'm going to put this at 229. We'll call it 230. I'm just going to say if this goes to 230 on a buy stop, then we'll look at entering the trade. So we'll put that number in. We'll go to 230. And yeah, I'm doing this at a big round number. That's okay, I think, in this case. For the entry, I'm going to make that good till canceled, but I'm going to make my stop down here just off the bottom of that triangle at 222. We'll call it 222.95. We'll give it a little bit of room to move to the downside. 222.90. I'm going to make it 96, so it's just a little bit different than a 95 number, and we'll click on good till canceled. And again, this is going to be a waiting order. I'm going to click that in market movers. We're going to put that in market movers, read the order. If and only if price goes to 230 or above, then enter the trade, else wait. And then if it goes against us, once we've entered the trade, that's the point at which we're going to take the trade off. So I'm going to go ahead and send that off. A couple of orders here to put this trade to get us into that perspective here. So last couple of things I wanted to look at as we get into, again, some of those earnings announcements that are coming up tomorrow. AXP, I talked a little bit about this on the Schwab Network this morning. It's kind of backing off from a resistance level. We've got AALY. Whoops. Is it ALY? ALLY. Ally Financial. There it is. Coming up. Ally Financial. Sorry, I had it misspelled there in my list. And that's kind of banging its head against that resistance as well. We've got CMA that's coming up. Comerica, which had gapped up and now pulling back just a little bit. And then we've also got, in this case, coming up on Friday, SLB. Schlumberger in the, or whoops, no, that's SLB. No, I was looking for a different one here. Hang on. HBAN, that's it. Okay, Huntington Bancshares in the regional bank space. So remember, we were kind of in the middle of those financials rotating through. Coming up after the close today, OZK, which is Bank of the Ozarks. Again, one of the big regional banks. CSX is coming up after the close, continuing to move higher here, but a little bit of a bearish divergence on the RSI. FNB, which is a regional bank. And then you've got LBRT, Liberty Energy, in that energy space, starting to see that turning back to the upside. But again, a bit of a fall off and trailing off in that RSI. So let's take a look at a couple of the Mag 7 stocks that are in the news. AAPL in the news this morning, once again with the deal, with some dealings with Meta and others in that space. Apple and Meta kind of back and forth in terms of a strategic AI partnership, META. See what's going on in that space. A little bit of a bounce this morning as well. We're starting to get, again, maybe some movement in NVIDIA as it kind of gives us an inside day after two kind of a solid down candles that were side-by-side candles. Let's take a look. CRM initiating stock buyback efforts, a $7 billion stock buyback going on right now and starting up today with that gap to the upside on CRM. And then some that are maybe kind of outside that halo, IBM, seeing a little bit of a bounce here ahead of their earnings as well. And then ORCL, which was really strong in the last couple of days, again, continuing this little bit of a bounce, and the RSI ticking back to the upside. All right, so some kind of interesting stuff going on, guys. Thanks for joining me today. My thanks to Brent Morris for helping out. Click on that survey link and fill that out. Follow me on X at Ben Watson CS. Brent is at Brent Moores CS. And thanks for joining us today. Make sure you click on that subscribe button down at the bottom of the page if you have not done so already. We'll see you with our entire slate of webcasts throughout the day and throughout the week. Take care, everybody. Bye-bye.